Hello, Maverick traders. Welcome back to your Maverick Currencies midweek update for July 6, 2022. As usual, Corey here with you, and we're going to go through a variety of things. Let's start with a reminder that you make sure that you follow your trading plan. Investing and trading involves risk, and we want to manage those risks. So let's get into it. Kind of a fun week. We talked about a lot of I really feel, and it doesn't always work this way, but I feel in sync with the markets. I feel like I've got a good handle on what's happening, and it kind of starts with the US dollar more than anything else. But if you look at markets, so equities are in a sustained downtrend. Part of that is inflation based, right? Everybody's kind of saying, okay, inflation's out of control. We're headed for a recession. All of these negatives, and these are known entities. These are known things that are out there in the markets at this point. But what's interesting about it, and so you'd say, well, it's had a chance to be priced in over the past few months. It's not like we're just catching wind that inflation is a problem. It's not like we're just learning that the Fed's raising rates and so on. So these are known. But what's interesting about it, and I've talked about this the last few weeks, this is not a popular take, but it's true, and that is that most of these inflation gauges have rolled over steep, sharp, big time. Um, I said last week, look, it's not a popular opinion, but over the last couple of weeks, I've been expecting energy to finally succumb. And energy was like the final holdout. Part of why oil energy is so strong is the debacle that is Europe. Europe's in an energy crisis more than anything else. So the two things that have been most sticky are food and energy, and that hits the consumer. Well, the consumer is down in the dumps. The consumer is pessimistic and nervous, and feels like the world's collapsing on them and so on. And it's really quite interesting. Inflation, it's not that it's going away. We still have too high of inflation, but actually all of these metrics have gone down significantly, for the most part. Now, sometimes the CPI, which is the headline number, is a little bit lagging. And so, for example, oil's come off dramatically, but it does take some time. And everyone complains about that it doesn't seem to always translate to the gas pump, right? Even though oil's down significantly, gas prices are still high, but they will come down over the next couple of weeks. There's a little bit of lag. So it might not be captured in this current CPI number that's going to come out, but the reality is this: inflation's already topped. It's already peaked, and it's already coming down in most commodities, most areas of the market. Energy was a little sticky up there, but it's coming off pretty dramatically right now. And a big piece of that is this US dollar breakout. Look, we've looked at the US dollar index chart in this midweek for the last couple of months because I think it is the driver of so many things, and the US dollar has a multi-year breakout to the upside. When the US dollar is surging to new highs, it's going to create problems. We talked about gold. Gold's getting hammered. We talked about oil coming off as kind of the final holdout. Oil and US dollars don't have to move opposite to each other, but it's certainly some, cause and effect. Look at the other things that are strong. The Swiss franc and then the Japanese yen has really strengthened lately. I'm not really going to give myself credit because I didn't trade the yen to the upside. I've been trading US dollar was my singular focus, but I did at least say, we had a few different traders ask about yen pairs last week, and the charts suggested you should be short yen, but I just don't like that. I still don't like that. There's just too much risk. It's such a heavily shorted currency. It's almost like this kindling, it's like this dry wood that if any little spark hits it, it can set it off. And I think that was the right call because you would have avoided some losses if you were trying to short the yen. The yen has certainly strengthened over the past week. So I'm not really trading it. I was more in the camp of, hey, it's just too much. You just don't need that risk, is my thought. I just didn't want to be betting on the yen going down because it had so much potential for a spike to the upside. And that's not over. If you want to play basically short yen pairs, right? Short anything and buy the yen as the counterbalance, you could probably look to do that. That makes sense on a risk to reward basis. The yen is not in a strong upward trend, but these past couple of weeks, I don't feel like it. You'd have to be careful and cautious with it because it's doing what I feared it might, which is starting to get some short covering and starting to see some momentum to the upside. Crypto markets are kind of exhausted to the downside. As we look at the economic reports, RBA has kept rates unchanged. That came out on our 4th of July weekend, but nothing really happening there. No change in rates. Job openings for the JOLTS better than expect, or well, 11.25 million job openings versus the 11.05. So, in terms of jobs, I don't think that really emphasizes one way or the other, but we do have a good employment picture. The Fed has two mandates to keep price stability. Well, they lost that, right? Inflation got away from them. But jobs, on the jobs front, that certainly have full employment. And then US ISM services beat expectations. When you get these PMI data, anything above 50 shows growth, and that one was a nice miss. So this on the services side, a nice beat, I should say. I misspoke there. A nice beat on that front. So as we look at the weekly performance here, and you look at price action, whoops, I didn't realize it would do that. I was going to show a couple of charts here, but I'll come back to it. As you look at this week, look at the weakness here. Gold and oil down sharply. Gold down about 4, oil down 11% so far on the week. And the flip side of that is, of course, US dollar strength. So let's come in and look. The S&P chart. So here you can see, we talked about it a little bit last week. You're trying to establish a higher low. And my thought is that we'll do a little ABC in equities. I personally, I'm not so sure it's up and away in equities. I think it's going to be just kind of a tug of war. But we are in this corrective phase where there should be another little push to the upside. You can see that markets are trying to establish that higher low. The weaker market won't even be able to do that. It'll just kind of wedge here and then break again. So we'll see. But if we get a nice little bounce here, it should just kind of be in that ABC style pattern. This is the chart of charts, right? This is the one that we've been focused on. Some good things happening here. It had kind of that fake out move. Then it dipped back in, creates this nice cup and handle, really picturesque. Once it broke out, I think you have to give it every benefit of the doubt. This is a multi-year breakout. When those things happen, they can run for quite some time. And that's what's happening. And look, it's probably not done. This thing could really accelerate to the upside. We looked at Euro USD last week, which is my favorite pairing right now. And it was at like 104 whatever. And what did we say? Well, we think it's going to parity to 1, right? So instead of it costing $1.04 USD to get €1, we think it's going to go to 1 to 1. Well, here's the reality. You want to take it one step further. A lot of times you'll overshoot the mark. I mean, this thing might go, in fact, I would kind of expect it, big picture, to maybe overshoot the mark, where not only does it not cost more US dollars to get €1, it might cost less than $1. We might go into the 90s, 98 cents USD to get €1. This is a huge change, and it's been playing out for many years. I mean, euro used to cost $1.20 USD to get a euro, and then $1.15, and then $1.10, and $1.05. And I said last week, look, it'll probably take a couple of months to get to 1. Well, we're already at 101 whatever. I mean, It's going, and it's going in rapid fashion. So I I'm not so sure we'll hit it this week or anything like that, but it's definitely, that is the breakout, that is the momentum, and I think we're going, usually kind of overshoot the mark, so we'll probably at least temporarily dip below 1 and then maybe see a bounce and then go right back below 1 big picture. But that US dollar chart, I mean, it has trend, it has speed, it has momentum. So for this week, what's happening? Well, the strength is in US dollar and Japanese yen, right? Those are 1 and 2. USD very, very strong. The weakness is coming out of the Eurozone, and it's just, they're in a bad spot. I mean, they got to do some things to fix their energy crisis. They're at risk over the winter time not having enough energy. I mean, there's plenty of problems there. They also are, of course, caught right up in that mess of Russia, Ukraine. That's where they get a lot of their energy. You do have to look at it and say, the U.S. is really lucky by comparison. We have access to a lot of energy here. Now, we don't necessarily, for many years, many decades, we didn't really tap into it. Maybe there wasn't the technology or the desire to do so. We would just import a lot of it, and we still get a lot of energy from the Canadian oil sands and so forth. But at this point, the U.S. can somewhat be energy independent. We still import some, but we could, if we wanted to, just have enough for our needs. We have the ability to do that. So Europe doesn't, and that just puts them in kind of a tough spot. Now, one would look at it and say, okay, well, but energy prices are backing up significantly. Let me flip a little bit the script and say, I don't expect, there was a headline that came out this week that said oil could go to 60 in a recession and so on. I don't think we're headed to 60. I think this is the overshoot on the downside, and that we're going to stay relatively well bid all throughout the rest of this year. And if you want to know why that's the case, circle Europe. Europe is going to likely, uh, there's no guarantees, but likely almost guarantee that energy stays up pretty strong, and throughout most of this year. So I don't expect us to go too much lower than right here. Look at this gold chart. I wanted to show this because it's basically, if you flip the US dollar and kind of talk about it, here is gold earlier this year and it went parabolic to the upside. We have the exact opposite thing happening right now. With the US dollar breaking out, we mentioned this last week in the midweek. Gold and these commodities are likely to take another leg to the downside. Gold broke support. It's currently in its plunging. And what normally happens here is you don't want to be too early to expecting this to finish, because it'll probably finish in grand fashion. A candlestick that's much larger than these and volume that's much larger. It's kind of similar to how this had this blow off top to the upside. Think of it in reverse. This probably won't finish until there's a big drop, a huge gap, big volume, etc. Right now we're in the free fall phase, and if you're going to do anything, you probably have to be short gold as opposed to anything else. Now, if we look at crypto, not much happening in crypto. We kind of talked about, it's just in this kind of exhausted state. And when you're exhausted, what do? Well, you rest, right? Just ran a marathon to the downside. At this point, it's not going to run back up, and it's not going to run further to the downside. It's just in that back and forth resting phase. So I wouldn't put too much emphasis on this. And here's part of the problem. If you're expecting crypto to have a big bounce back and you say, well, why aren't these skyrocketing? Why doesn't Bitcoin bounce up to 25,000 and so on? You just have too much of this. So the latest collapse was Voyager. Voyager went bankrupt. Three Arrows collapsed. I mean, it's just all over the place. Hedge funds and brokerages and all sorts of things that operate in the crypto space are imploding. You're hearing nearly every day about somebody in the crypto space that's filing for Chapter 11 bankruptcy and this and that. So, this is the latest. Crypto broker Voyager, now they're going through bankruptcies. Any equity holders are completely wiped out and so on. And it's really hard to sustain a rally when you have these things happening. Remember, there's a lot of counterparty risks. There's a lot of potential for liquidations in the midst of bankruptcies. If they have any assets, those assets get liquidated and paid out to, the highest on the food chain. So usually that's debt instruments, secured debt, and so forth. So if it goes through a bankruptcy, they'll unload assets, and then that gets paid out to the secured debt creditors and whatnot, if there is any money left. Those things, these liquidations and whatnot, it's going to make it difficult for any of these cryptos to have a big sustained rally. So as we look at the markets, it's just pretty much status quo. We're in this downtrend. I mean, there's not too much to add. If you look at the worldwide markets as compared to the S&P, a little bit weaker, where we're kind of back to retesting the lows yesterday. Why? Well, it's being weighed down by the European markets, by other international markets. So US is not vastly outperforming, but it is outperforming a little bit. As we look at the crypto space, this has been the same chart that's been in place. I mean, I mentioned last week, if you're going to trade Bitcoin, it's almost like you got to buy it when it's down in the 18,000s and sell it when it gets up closer to, 22-ish thousand or something like that. And that might work a little bit. It did dip down into those levels where you could have bought, but I'm not doing anything. I just don't know that there's no real momentum. So other than just maybe trading the ranges back and forth and trying to do something like that, I don't know that there's a lot of possibility right now to really capitalize. We'll get a break out of that consolidation, but we probably have to wait for that to happen. Later today, we get FOMC meeting minutes. This is where the Fed releases their minutes and what was discussed in the recent Fed meeting and any discussion about future rate hikes, things like that. It can add a little bit of information. Employment. We get both Canadian and U.S. employment data on Friday. So no surprises really expected, but it has slowed the amount of job growth and things of that nature. Unemployment rate very nicely down there at 3.6. Now, again, that doesn't account for everyone. Some people have left the job market and they're no longer lumped into the unemployment rate because they're not seeking employment. But definitely on the jobs front, the Fed's not overly concerned. The Fed is much more concerned with what's happening in, inflation and those things. So let's come over and take a look at a few different charts. If anyone has anything specific that they want to look at, feel free to fire away. We'll come through, just look at a couple here. US dollar, I mean, if you just you could even maybe start to draw a channel off here in terms of the forecasting. And it wouldn't shock and surprise me if we kind of blew through that channel and just really turned vertical here for a while. But ultimately, this is US dollar against everything. It is just up and away. Now, if we look at it, so think about trend and momentum like we talk about. You're up, you're bullish on US dollar, and you got to put that at the forefront. Yen is starting to see a bit. Swiss franc, I would add to that list. On the bearish side, to the downside and up and down. Anyway, the euro is quite clearly more on the downward angle of things. There's a couple others. Let's just glance through these. Like I said, the yen is starting to catch a bid. And this is what I was referencing is, I'm not playing the yen to the upside. US dollar, yes. Swiss franc, yes. But the yen's had a big rally. It's just that, did you want to bet on it going up? It's more like, I just don't want to be short anymore. And by not being short, that was the right call, certainly the right trade. Now, I think you can start to look at it and come back to it and think, okay, well, maybe we can actually play the yen to the upside. Maybe it is going to trend reverse or something like that. I don't know. It's not there, where I'm really aggressive. I'd much rather come back and look at something like the Swiss franc. Swiss franc has pulled back for a couple of days. This was the game changer. We talked about this was the kind of unknown where they come out guns a blazing, remove their bond buying programs. They started selling some equities and some assets and whatnot. It was a game changer, and the Swiss franc took off to the upside. You could look to buy the dip in Swiss franc. You can continue to look at euro short, so it would probably bounce in the short term, and then you look to re-up. British pound looks bad, feels heavy. That's more of a short than anything else. Kiwi is more of a short than anything else. CAD, I'm going to still put on the long side, and I'm warming up to the CAD in that I haven't been, really bullish or bearish, but the thing I like about the CAD is it's got the energy aspect to it, where I think energy, I was negative on it, but I think it's done most of its downside. Here you got a little cup and handle. So this is, in looking at other currencies, let's say if you feel like the US dollar's run too far, or you feel like the Swiss franc is not something you want to be long, CAD would be in that list. Certainly. CAD looks better than almost everything else, with a couple of exceptions. And then Aussie still negative, still bearish. And the Aussie, bounced a little bit on the RBA, but that bounce is not convincing to me. I would anticipate this bounce to fade and that we trade sub this level of support. So I suspect, I like actually Aussie and Kiwi and some of those more on the short side pretty soon, sooner rather than later. So if you wanted to play a commodity pairing together, you could even go Aussie against the CAD, or, Aussie against the Kiwi, or Kiwi against the CAD, or something like that. And it would probably be mainly the CAD against those, playing the CAD up, playing the Aussie and the Kiwi to the downside. So with that in mind, I see a request. I just mentioned that pair. The request was for Aussie CAD. So let's take a look at it. I was going to come and click, but I guess we don't need to necessarily. So here's Aussie CAD. This is, let's kind of reassess our situation here. So Aussie CAD, you kind of had a trading range back in here, right, which has been broken. But you can kind of look at this trading range and say, we really should have more downside. If you measure the size of this range and then you project something similar to the downside, it's really probably going to point towards another couple hundred pips, really. I mean, down there in the 87s, probably even sub 87 from its current 88.50. So that's a 150, 200-ish pips of downside, and I think that really makes sense. So this is your Aussie CAD. You could do the same thing, I think, with Kiwi CAD, where you could come in and say, okay, what about the Kiwi versus the Canadian dollar? It's very, very similar. If you have a preference of being short Aussie or being short Kiwi, you probably pick either one. But I don't mind it against the Canadian dollar. I think that's a decent pairing to continue to trade to the downside. We don't often match up, Aussie CAD or Kiwi CAD, but this is a time where I think that can make sense. Why is the USD so strong? There's a number of factors. obviously, the first and foremost factor might just be because it's the US dollar. It's the reserve currency of the world. It's backed by the largest government. It's backed by the largest economy. It's backed by most everything's priced in USD, et cetera, et cetera. So it's just kind of its place as a safe haven. That might be the first reason. Some other reasons, again, we're in a better energy space. It may not feel like it. You're in California and you fill up your gas tank and you're cursing and ticked off, you know. I get it, but actually the US is in a better spot. I mean, go look around the world. In Europe, my heavens, not only prices, but how would you like to spend 6 hours in line waiting to get some gas, you know, and so forth. It's a mess. Around the world is in a much, much worse spot. And remember, when you're talking about currencies, it's all relative, right? So you can say the US dollar, you know, we're struggling. We got inflation. We got this and that. And then everyone would say, yeah, but it's the best house in a bad neighborhood, so to speak. It got a better, you know, you think Europe would trade economic conditions and circumstances in a heartbeat? Yeah, absolutely. And, you know, go around the world and say who would like to trade the US spots in terms of their energy, in terms of their, you know, food, in terms of just the economy. Any country would trade the U.S. in a heartbeat. So there is economic strength and things that are here that aren't as much, even though it's bad. I mean, it doesn't matter that this is bad. It matters more that these are worse. I guess that's the point, right? Do we have some difficulty? Do we have some problems? Do we have to that we have to deal with? Absolutely. But if everything else is worse, then you're the beneficiary, I guess. Euro yen we had a request for. So if you want to play the yen long, I said certainly don't. I don't want to be short the yen. That's my point of emphasis. Getting long versus just, you know, not trusting the trend. And here's why I didn't trust the trend. Well, had you trusted the trend, it would have really been a, you know, a big stop out. And so, like I said, I don't really give myself too much credit other than I avoided the area that I needed to avoid that could have sucked me into some bad trades. And I just didn't think it was the right environment. Again, this gets back to the economic conditions, the risk. When you have a risk off scenario, and more specifically, what happened in you know, with the Swiss and their dumping of assets and so on, that creates a lot of risk to the Bank of Japan making changes. And people will get nervous, and any nervousness in the yen, you just have to understand how heavily shorted it is. It can move in sharp fashion, and that's what's happening here. I mean, we've gone 500 pips. Think about it this way: 500 pips in about 5 days. Okay, it is it is, you know, dry wood that if it catches a flicker, it's a problem. Now, the aggressive trade is to kind of say, okay, but I expect that to even get worse. Like I want to short euro yen, right? Whoops, I didn't draw that very well. I want to play this to continue to the downside. And I'd much rather do that. It's either, as I said for the past couple of weeks, I'm either avoiding the yen or I'm going to play the yen up, which means I'm going to short yen pairs, right? I would short euro yen, which would play the yen part bullish. I'm either playing the yen bullish or just avoiding altogether. So all of these yen pairs, you'll see this, just a steep dive. You know, Aussie yen, it's going to be the same steep dive, and CAD yen and so forth. You know, sharp downturns. There's pound yen and so forth. They're all in these sharp downward moves. Now, I like it as far as pairings, euro yen to the short side. We've been focused on Euro USD. I kind of agree that, like, I mean, it's gone from where we were last week at 104.70, and I was saying, look, I think we're going to break. I think, first of all, that we're in this kind of cup, inverse cup and handle. It's going to go down here and plunge. It should go down, towards that that parity level of 1, but it's not going to happen this quickly. Well, it is happening this quickly. I certainly didn't expect it to have already moved. Again, like 400, 500 pips in a few days. This has been phenomenal. But where do we go from here? Well, I think we bounce here. Now, I'm not buying Euro USD, but if we measure the move, this was 200 pips. You break that level, you should plunge that 200 pips. That should be the initial drop. From here, we get a little bit of a bounce, and then we still probably head lower. But I still think to get to parity, I said it might take a couple of months. Okay, might happen sooner than that, but we're still probably a couple of weeks away. We still have another 185 pips to go. Could it do it rapidly? It could. I just think it won't. I think it'll be a little more choppy than that, and then we get down there. My best guess is it'll still be late July before we're really talking about that parity. Probably a couple more weeks to go. So good stuff. Yeah, so crypto, I mean, if you're gonna play it, the safety trade would be to kind of buy Bitcoin or Ethereum. Those are the two that most tend to have more confidence and trust in. And so it's kind of like when you think about FX, you can think about crypto the same way. Your baseline safe haven type are Bitcoin and Ethereum, right? Those are kind of like the US dollars, you know, it's like a safe haven. It's the big boys, right? They tend to move a little slower on a percentage basis, but you're not as concerned. You're not as worried about volatility and so on. It's slower moving. When you start getting into, you know, these on the more fringe, these are going to have much bigger percentage moves. If crypto rallies, I mean, these could be up 20%. Bitcoin and Ethereum, maybe they go up 8%. It'll be different that way. But these have kind of that higher volatility, and I almost hesitate to even compare them to, um, like, Kiwi or Aussie, because Kiwi and they're not this risky, they're not this crazy, but it's kind of the same thing where you'd expect if something moves a big percentage, it's more likely to be these than US dollars. That's the general thought process. So if we look at, a bounce and you think it's going to bounce, it depends on how aggressive you want to be, because if you want to be aggressive, you come into these that it's just high risk. I mean, I'm not doing it. First of all, I'm not betting on a big bounce, but secondly, I'm just not trading those because there's just so many headlines. I mean, Solana, you could come in and somebody could be liquidating massively on some, deterioration in their business, and they're going through a bankruptcy, and it's just the wild, wild west. It is volatile. It's pretty crazy out there in crypto land. So healthy amount of caution is probably justified. All right. So here's kind of how I size things up just in terms of tradable. I mean, you really have US dollars or yen or Swiss franc as the more bullish candidates. The bearish confirm the euro. I'd put a close, I mean, pound is right there, kind of weaker as well. You could put Kiwi in there, you could put Aussie in there, and I'd put CAD more up in this category in terms of rankings. These are your more bullish currencies. These are your more bearish currencies right now. So, as always, good reminders, proper position sizing, make sure you have some velocity there. We have a couple of things coming up. We've got a preview of the US payrolls report. We'll send that out tomorrow. And then we've got the actual payrolls meeting Friday morning. So we'll be together 8:15 a.m. Eastern Time to trade the payrolls. This one should have some volatility. There should be some opportunity there trading that on, the news. It won't be, CPI, inflation numbers are kind of the big thing, but payrolls are still big and still something the Fed is watching closely. So any major disruption in the payrolls could change their policy. All right. Thanks everyone for being here. Have a great rest of your week, and we will see you all next time. Goodbye, everyone.